As the situation deteriorated substantially over the weekend, on Monday this week, we launched a global consultation with international institutional investors on the potential reclassification of the Russian equity market. And as you pointed out, the result of that consultation was really overwhelming. International investors around the world told us very clearly that the Russian equity market had become completely uninvestable, and they also pointed out that it was now appropriate, according to MSCI's methodology, to remove it from emerging markets and reclassify it into standalone markets status. We ran the consultation over 48 hours. We had tremendous outreach across many different clients in different locations around the world. And then on Wednesday night, after the close of the US market, we announced the reclassification of the Russian equity market. I would say that it was ultimately a relatively easy decision for two reasons. First of all, objectively, as you pointed out, the stock exchange had been closed since Monday. Severe sanctions had been imposed on many Russian companies. And even the currency market had become functioning less well. Clearing houses in Europe had announced that they would stop accepting Russian securities for settlement. So there were a lot of objective pieces of evidence pointing to the closure and the inaccessibility of the Russian equity market. So we had that evidence in front of us. But also we had this overwhelming support from international investors for reclassifying Russia. So ultimately it was a relatively straightforward decision. All the evidence and client opinion pointed towards the reclassification, and we announced that on Wednesday night.
And Dimitris, what we're seeing now is really unprecedented, a major decoupling of Russia from the US and global financial system. Also, just give us some insight into how market participants are actually responding to this, because I would contend it's pretty hard to find a buyer for any Russian assets out there at the moment, given the capital controls and financial sanctions that are in place on Moscow. So what's the investor feedback that you're getting on this, and what does it mean for investors?
Absolutely. It's become more and more difficult. In fact, at the moment, both the local stock exchange, the Moscow exchange is closed, but also the ADR and GDR market has been completely impaired as well. So remember, in order to be able to transact in a market, first of all, you need the equity market to be functioning and to be open. Secondly, you need the currency market to be functioning as well, because for an international investor, once they transact, they may wish to convert the proceeds of their transactions into their local currency and repatriate the proceeds. And thirdly, you need to be able to have counterparties on the ground executing transactions, custodians, broker-dealers to trade and settle the trades. Now, none of those three conditions are in place at the moment in Russia. Both the local exchange is closed, the depository receipts are no longer trading in London and in New York, so the market is closed. The currency market has become severely impaired as well. And then because of the sanctions, it is practically impossible also to find the right counterparties to execute and settle transactions. So all of the important elements that need to be in place for a market to be functioning well are no longer in place in Russia. And that's the feedback we've been getting from our clients, from investors. And they're taking all the necessary steps from their side, in order to manage this very difficult situation.